Good morning, everyone. How's everybody doing this morning? Raj, how are you? Ah, well, it's quiet. Or am I early? I think I started a little early. Anyway, let's get right to it. Good to see everyone. Let's take a look at what's going on in the overnight. So our overnight inventory is short. What that means is the majority of the trading is underneath the close of the previous day. Why is that important? Well, do you guys know what a backfill is? Okay. In market making, in distribution of securities, right? There is a process. That process is you take price higher, and what that does is that brings in a bunch of people and they chase price higher. The other thing you have going on is when you get a move up, it does a couple of things. It makes people chase price. The other thing is people who don't want to chase price will go and put limit orders in case the market comes back down. You heard of that sort of thing? So there's a couple of things going on, right? When you take price higher, you get people who chase price, and then you get people who bid for product, which means, oh, it went up to 58.90. I'll put some buy orders here at 60, so when it comes down, I can catch some. Make sense? You with me? Anyone awake? I know it's early. So the move up creates demand. That's why you'll see old traders, they'll say that price is an advertising mechanism. When you take price higher, you get people to want to buy it because they think it's doing this. It's going to go crazy, right? So you take price higher, some people chase, and what happens is other people put buy orders in and wait for the move down to catch some at cheaper levels. So that's what happened here. Now what we're doing is we are backfilling this move. The word is backfill. You go back and you fill in the demand with supply because you run out of buyers at the highs. So you go back and you put the price on sale and you fill in that demand with supply. This is how you sell size. Now this is something that you guys don't do because nobody distributes size, right? Well, what you're doing, Raj, is you're not filling the shelves. You're emptying the shelves. You're getting people to buy product off the shelf. Get it? You just kind of zigged when you should have zagged. It's okay. It's still early. Okay? And that's how you distribute. Okay? The other thing is, what happened yesterday? Right? We caught our poor shorts are trapped here. They're trapped here. They're trapped all over the place in this gap. So what this does, it allows people who are short to average up and then try and cover off some. That's why the market is bid right where it is, because that's the place where the shorts came in and started competing for product. Okay? So overnight inventory is short to go back and fill in the demand that yesterday created. Yesterday we had a gap up. It's a very big gap, right? Look at the size of this gap. From 57.41 up to 5,800 and change. That's a huge gap, another big one. It might take a day or two to fill that. It might take a month. It all depends. What does a gap mean? A gap means that you had a change in business, what we call a material change, right? There's a material change to the business of the nation with tariffs. So the market reflected that material change in the chart. The charts tell a story, right? They tell you what's reflecting in the business. Most people think that this is random. And let me ask you a question. Do you think if you put $1 billion on a table, or even $1 million, let's not go Dr. Evil. Let's go just $1 million, right? If you put $1 million on a table, do you think the person who owns that $1 million is going to do business in a random fashion? Or are they going to do it in a disciplined, measured fashion? Because if they do it in a random fashion, it means somebody like me is going to be sitting around waiting to scoop up that $1 million because they're going to lose it. Right? There's no randomness when it comes to money. The backfill, exactly, Rejon. The backfill and the backside of the move is the same thing. Nailed it. Nailed it. So, how do we use this information? Remember, was it? I told you guys last week that the information I'm going to give you guys has to be useful. Right? Right? So, how do we use that? If you're a long trader, what you want to do is you want to wait for price stability and then a move up to correct inventory. So you can go long and then sell into it. If you're a short, You wait for the back end of the move and you short here, put your stop above the close, and let it come down and just use these levels. And if it can't get to the lower levels, cover. Right? So that's the practical use of this information. Hey, OnlyFlow, how you doing? Right? So practical use of trading information is essential. Okay? Because otherwise, we get inundated with so much information. What can we actually use to make money? Right? So if you were waiting for a short, you wait till these guys do this, and then when you notice that in the overnight, when the overnight opens, it cannot get above the close, that's when you put into your short. You get into your short, you put your stop at the top of this candle here, right? And then you just wait and ride it down. Now, when it consolidates like this, you have an option, right? As the market comes down, like say I was short 58.60, right? Say I didn't catch the top, right? I'm short 58.60, and I'll use my 1-minute candles to find an appropriate stop, right? So I'm short 58.60, and this candle opens, can't get up to 58.60. I can stay in the short. When it starts to consolidate here, now you have an option. Larger traders can hold through this, and as long as it doesn't take that high, you can stay short. That's kind of risky. For me, if I was short 58.60, 58.55, and it comes down into the 47s, I'll cover, right? I'll take 5 points, 10 points. I'm not, you know, I'm not a snob when it comes to taking profits, right? You put $300 on the table, I'll pick it up. I have no shame, right? You put $800 on the table, I'll pick it up, right? When it comes to retail trading, if you drop in money, I'm picking it up. I don't care. Could be $2, I'll pick it up, right? I don't have shame, right? I don't need a $20,000 trade, right? You pick up $300, $500, $800 at a clip, it adds up, right? As long as you don't try and make 20 grand and lose it all. So that is one way you can trade this. Larger traders can hold through and wait for that 41 level, right? Now we did a look below 41, came back up to 48 now. Let's see what happens. Overnight inventory is starting to correct higher, right? Let's see what happens when London opens. And can it actually take out that 58, 53 or whatever that level is here? That's kind of your line in the sand. That's the next one, and then the close will be your next target if we get rotation up. Otherwise, we're going to come down to 58.30-ish, and we're going to test this 58.25. Okay? So that's tactically where we are in the overnight session. This is how you do a top-down. You go and you look at the bigger picture. Now we go and look at a more close-up look. So we're trading 48.5. The upper stops are here at the top of the J high, then that B high up here, and then 57, right? And the close is way up here at 58.68 quarter, okay? Good excess on the low, right? That means there's a decent amount of letters by themselves at the bottom of a profile, right? Now let's take a look at our, I did a balance zone this morning, and it's 58.39 and 3/4 to 43 and 3/4. And what I was doing was I was looking at that low, that high, right? And then when we looked above that high, we came right back to that low. So there is a response at these lows and at that high. That's where the two-sided trade, the sellers step in and sell here. They stop selling here. Double it to 51 and 3/4 to the upside. That's the profit zone. Double it to 31 and 3/4 to the downside. That's the discount zone. Okay? And this helps us manage our trades, right? Especially if you're a scalper. Even if you're a small position trader, you can use these levels. Right? VWAP is at just up here at 58.50. So what is the business goal tonight? The business goal is to accumulate position underneath VWAP and sell it above VWAP. Right? That's how business is run. That's the business. Right? We buy product under VWAP and we sell it above VWAP, right? Wholesale, retail, right? Walmart buys stuff at a cheaper price than they sell it to you, right? That's how they make money, right? Because it's a business, right? None of this is random. I don't know who came up with the random thing. Obviously, they never worked on a trading desk. It's funny. If I was ever trading for my client, the Penguin, and I was selling 1 million shares of stock and I didn't sell any stock, and he comes and he asks for his report, he goes, "How do we stand?" "I haven't sold any." Why not?" "Well, because it's random." You're fired. It's, I'm sorry, right? It's just, you know, some of the stuff you hear is just crazy. Stock's at $5. I got 1 million shares for sale. He's expecting to have $3-4 million in cash already in the morning. I haven't sold a single share because it's random. Yeah. Oh my God. Oh. Does it make sense to accumulate VWAP is going down? No, that's not for you, RS. Good question. RS is going, does it make sense to accumulate below VWAP? It does if you're a wholesaler. It does if you're a large trader who acts like a wholesaler. But it does not for a retail trader. Right? That's not for retail. I'm trying to explain the business so you understand what the next move is. Does that make sense, RS? Cool. Yeah. That's why, like I taught you, you just stick to your setup. Here's the thing. The wholesalers and the large traders, they have their way of doing business, right? You could call that their execution plan and their setup, but they're not traders. They provide liquidity. It's a completely different business than trading, right? We have a completely different business model. Once you understand that, right, you understand that we don't trade like a market maker. We don't trade like a wholesaler. We have a completely different business model. For some reason, I cannot enable the bell icon on your YouTube channel. Could you look into it so we can get notified when you come live? Oh, okay. I didn't even know that there was a bell. Thank you. All right. I'll check into that. No problem. Right? Yeah, we're not Ticketmaster, right? We're the scalper outside the stadium, right? Trying to move those Bon Jovi tickets that nobody wants to buy, right? Kraftwerk. Man. Take me back to the 80s, Mike. Jeez. So we've got sellers at 49 right now. There they are, right? For us, it doesn't matter if we have a strong trend up or down. We are looking to get in on either side. Yeah, like here's the thing, Rejon. Apparently, somebody did the stats, and 80% of the time we go back and forth in a balance. 20% of the time we're in trend. So what I do, think of it this way, right? The trend is when you take the goods to market, like the highway to market. I will trade the balance. Like yesterday, for example, when the market did this, right, made a huge move up, right? I don't try and trade this, right? I don't care about this. I'll wait for this to happen. I'll trade this and I'll trade this. But I leave this for other people. Does that make sense? I don't want to catch this move. I have no interest in the big move. Right? This is for glory hounds. Right? Hey, listen, if I'm long here and the market breaks, I'll sell into it. I'll be happy enough to sell into it. But I'm not going to initiate a trade in this area. Right? If I was long here and this thing broke up, oh yeah, I'm not going to, I'm not going to kick it out of bed for eating crackers. Right? I'll take the money. But I am not chasing that move. I have no interest in initiating in this move. I'll initiate here or here because this move creates opportunity. The problem with the big moves lately is the big moves are very illiquid. The order books get very thin when those big moves happen, and they put us at a distinct disadvantage because we don't have the $100,000 data feeds. We don't have all the expensive execution software, right? We're clicking with a mouse, right? You're not going to catch the moves. You're not fast enough. By the time you put your bid in there, the order book changes. You go put a market order in, you get filled 6 points higher. It's just not worth it, right? I like to make money in a boring, quiet way, right? And we have margin increases as well. So tonight, if you're trading at some of the firms, right, it's $594 to trade a micro and $5,900 to trade a mini. Whereas usually it's $40 to trade a micro and $400 to trade a mini, right? So that means for me, if I'm going to take trades today, I'm not going to waste capital on trades that aren't A plus setups. And what's an A plus setup? An A plus setup is a strategy that I use that is repeatable, that I've tested a whole bunch of times, that I understand the order flow, I understand when to take it, when not to trade it, right? Yeah, let's not get into that, Mike. I have no idea either. I'm sure they restrict trading. Now, under 43 and three quarters, so I've drawn my zones out, right? I've looked at the bigger picture, right? We corrected overnight inventory a little bit, right? But we found sellers here at 49, and we're putting it back on sale, coming back down. I would like to see whether that overnight low holds in 6 minutes when London opens. Right? Remember, the only buyers tonight are short sellers who are trying to cover. Like, nobody's really trying to buy this to build a position up here because nobody wants to build a position on a big gap. Right? Hey, Jerry, how you doing? You'll notice even tonight there's less people on the stream because margins are increased. Right? Less traders. Now let's see. Is this a look below and fail? Right? So if you did a look below and fail, you can anticipate sellers at 45. Look, right there. Tagged it to the tick. There's no magic about that. There's no special software. Right? We said that there was going to be sellers here. Hit it to the tick. The next candle, the top is lower because they're competing and pushing price lower. It's as simple as that. This way you can manage your expectations, right? Because if you had bought 44, then you know that when it gets to 45, there's going to be a seller. So do you really want to take that trade at $500 for a micro? Any light bulbs going off? Mike, we're getting rid of that term FOMO, right? All these terms like tilt, FOMO, they're just excuses for bad business behavior, right? That's like when you've got a kid, say you had a 4-year-old and he's walking around with a baseball bat hitting people in the knees and you don't reprimand him. Is that behavior are you going to encourage that behavior? That's the same thing as a trader blowing up accounts and chasing price, revenge trading. All of that stuff is just bad, bad, bad discipline. And it's an excuse, right? Instead of like changing the way we do business, we encourage bad habits by giving them these names. When I started retail trading, you guys would talk about FOMO. I thought it was a stock symbol, FOMO. Right? How about use trading psychology before you lose all your money? I was talking to check this out. This is really interesting. I had an idea. Sometimes I come up with these ideas. And I called up one of my friends who's a very, very well-respected trading psychologist. Right? And I said, how about using trading psychology before you lose your money? And she said, I don't know if that would work. That's my question now. Do people have to experience the pain of blowing up an account for them to do good business? But if you want to think about that, if you went to work at a bank, Do you want to make a mistake on purpose and cause a huge accounting error and get fired? This is what I'm trying to figure out. Can a person off the street be taught good business habits before they lose all their money? Or do they have to lose their money to be taught business habits? I think that's ass backwards. Because in no other business do they encourage you to fail. In no other job, like Dave drives one of those big semi tractors, like it'd be like handing him the keys to a brand new Kenworth and saying, "Here, go drive it off the road into a lake." What do you mean philosophy of trading? Business is business, right? I don't know. It's up to you guys. Maybe. I don't know. I don't have the answers. I'm just asking the question. I was raised in the business, so I know what you guys do does not wash in the business world, right? What you guys do every day does not wash in the business world, right? You can't come up with these BS excuses for losing clients' money and being a screw up at your job. You get fired. But hey, listen. See, like right this, don't trade this. This is that barcode, right? Let's see if it can take out that candle. See how it's choppy around this level? Because we're right in the cost basis here. That's why it's kind of slowing down. Let's see if it holds and moves up or down. But right now, it's very hard to predict which way it's going to go. There are sellers here. That is the one thing. Let's see where it finds the bid. And I'm watching to see whether that overnight low holds. London loves to go lower, grab some cheap inventory, and then take it higher. Yeah, I mean, if you acted the way that people act in retail trading in a normal business, it's going to be pretty much you're going to be unhireable. Who wants to hire a trader who consistently makes mistakes and loses money? You know what? Exactly. Uh, all right, here we go. Come on down to 39 and three quarters. Let's go. Oh, It's taking time to follow through. Go on, couple of more ticks. See if that 39 and 3/4 level is responsive. Now, anyone who is short in the 49.48 level, they'll come in and start covering before the close. I'm sorry, the overnight low. Right, they'll start front running that. There's 39 and 3/4. If we got a lot of competition, we'll look below that. See if we can offer over 41. There's a quarter print. Half, 3/4, 42. Okay. Yeah, if we take out the overnight low, then of course look for the daily low. Just finding the bid. You know, we find the bid when the market opens. We try and find the bid when London and Europe open. Some sellers at 42. Come back down and see if we can hold 39 and 3/4. So what I'm looking for today, as we roll into the New York Open later on, is I want to see how the market handles this new information. You know, of course, you get that big rally up, then you backfill it. There we go. Eh, just give it some time. So slow night in Walmart. What's their contract volume? 60,000? So twice now that 39 and 3/4 is held. And we'll have sellers here at 42.25, 43, 42 half, right? Because they took in inventory on the way down. Print, there's 43. There we go. So we found bids here, folks. Right? So now those are what they call mechanical levels. If you came here and you had a lot of size, that would break. But obviously there weren't that many size sellers at 39 and 3/4. to justify putting the price on sale down here. So they came here, they saw buyers, and they lifted their offer. That is that rotation, right? So the zones are working, right? I always like to see whether my zones are working and whether my brain is working before I start trading. And that's pretty much it. Then 43 and 3/4. Let's see if we come back down to 39 and 3/4. Right, so the zones are working nicely. Now you know the zones are working, then you just wait for your setup. You can, Mike. What is your goal? Right? So if you're getting long, say 40 and a half, 41, you know that there are sellers at 44. So for a quick scalp, sure. Now if you want to build a position, right, and you're building a position here, you'll use 39 and 39 and a half as an out, right? And how long do you think before we build a position and do this? So it depends on what's your time frame. For scalping, sure, you can get long. Do you want to get long and build a position and sell it up? Depends on the kind of trade. So maybe if you're buying 5, 10 contracts under 42, right? Say you long 10 at 42, you sell some at 44. If you can get a print at 44, sell some here at 45, right? And sell them on the way up. You there, Mike? Lost you. Right? Because inventory is still above us. Short-term inventory is above us. That's causing resistance. Right? So scalp long, sure. Position long, I don't know. And I'm telling you that with all honesty. I don't know position long. Scalp long, sure. Right? Okay, then scalping is fine. The levels are working, so you can scalp it, yeah. Do what you're comfortable with. Right? If you're comfortable scalping, scalp. Right? Once you build up, it's like once you build up the time and the experience and you can hold trades longer and you're more comfortable with that, then hold trades longer. Right? You got to do what you're comfortable with in business. Just because one person is holding for, and in every trading room, you always got some jabroni who's going, yeah, I made 30 points, 40 points, but they never ever tell you when they lost 30 points and 40 points, right? So there's always that. No matter what trading room, and we don't have a lot of that in our room, but every once in a while you'll get a guy, oh, I got my 40 points. Oh, I got my 30 points. But they never ever tell you when they lose money, right? So you just ignore all that, stick to your plan, right? Stick to your plan and do what you're comfortable with. Do what your skill level allows you to. If you're building your skill level, don't worry about what everybody else is doing. You know? I don't know who's talking about sharp ratios in a retail trading room. Like, Mike, like I said to you a couple of weeks ago, right? Just take all that crap and throw it out. Trade manually. Try and make some dough. and be happy. Right? Don't overdo it. Right? Make your money, build up your experience. Right? Take this thing off autopilot. On principle? I don't take trades on principle. I take trades according to the business at the time. Hedge my position? I'm a retail trader. So when my position goes against me, it means the business reason for my trade does not exist. So I get the hell out. Right? So my business reason for going long at 41, let's go through this. Right? We failed to take out 39 and 3/4. That means nobody needs to sell underneath 39 and 3/4. I go long 41. If the market goes underneath 39 and 3/4, I'm out of my trade because my business reason for the trade no longer exists. So this hedging thing, that's another thing that large traders do that retail traders should not be doing. If you're a retail trader, right, here's the thing. If there's no business reason for the trade, why are you taking it? This keeps you from all that stupid FOMO and everything. I go long at 41 because nobody is selling under 39 and 3/4. My risk or my insurance is here. The business reason for the trade is to sell it here. So I go long here, I put my sell order here, the market goes up and takes me out of my position, I sell my inventory, I take my cash, I say thank you very much, and I go have a coffee. Right? There is no reason to hold the trade if it goes to 37. Don't overcomplicate this, folks. You overcomplicate this at your risk. Right? There's no reason to overcomplicate this. It's a simple business. Right? It's supply and demand. If there's no supply, grab some supply and then sell into the demand. Right? It's not rocket science. Right? Retail traders have no business trying to hedge trades. And what are you doing? Going long in one account, short in the other? If you do that at the same brokerage firm, you're going to get clipped for wash trading. And they'll kick you out of the brokerage firm. You know, I had a buddy of mine trying to do that. Was it 2 years ago? He would go long in one account, short on the other, or long micros and short minis. And they came to him, they like, you're wash trading. Get out of our firm. They kicked him out. Just keep it simple. There's no supply under 40. I buy supply at 41. Where's my insurance policy? My insurance policy is here. Right? I'm long. Here's my stop. Right? And I sell here. If I have more, I'll sell here. I'll sell at these white lines. Or before the white lines, so I front run them. Right? Simple. Right? If there's too much supply, I go short. Right? So if you're shorting, you put your stop here. And you cover as the market goes lower. Right? And if you keep your analysis simple, and you keep all the mumbo jumbo out of your head, you will actually start becoming better at execution. Right? Just clean out your head. Right? Your head is like, your head is like an attic of a 100-year-old house. And it's just full of all this crap that you've picked up over the internet. right? And off of social media. Clear all that out and think like a business person, right? And your life will change. I don't know what a multiple stop sweep is. Once again, I have no idea what that means. Once again, I'm going long here. My stop is here because if the market goes under this level, the business reason for my trade does not exist. Do I have fixed stops? Yeah, it's right here. Right? So you go long 41, you put your sell order, you put your stop in at 39 and a half. It can't be more simple than that, folks. Buy, stop, sell. Buy, stop, sell. Buy, stop, sell. Buy, stop, sell. And you do it like second nature, right? That way you don't get that way you don't get caught like a deer in the headlights, right? You train yourself how to react. This way you get out of bad trades quickly, right? Take all that mumbo jumbo and throw it out. Yes, if the inventory is positioned above, I'd still take the fail to look below because the market is telling me that nobody needs to sell under 40. Now, how long do I hold that trade slip ED is based on that inventory. So these white lines tell you where the sellers are going to be. So if I'm long 41, I'll be selling 44, 45, right? Before these sellers can come in and grab my client, right? I have product here, right? I need to sell that product. I need to sell that product before somebody else comes and grabs my customers. Make sense? Once again, simplicity, right? The logic of the look below and fail is based on business, right? It's a business practice. When supply runs out, price goes up. When the sell orders are completed, the market will go to the next highest price to find a seller. You become that seller by taking in inventory, right? You get liquidation into wholesale hands, redistribution into the retail flow for profit. Yeah, I was saying 41 because 40 and a half, maybe I don't get 40 and a half, right? I'm using this level and the bottom of these candles. They're telling you that nobody needs to sell under 39 and 3/4. There you go. Watch this video again, and I don't know what you guys do, but try and clean out your head so you can keep it real simple, right? The more simple you keep it, the better you'll be able to execute, right? Get rid of all that crap in the attic, right? That goes double for you, Mike, right? Clean out all that old. You got 300-year-old magazines up there. Throw them out. You're welcome, Phil. Just keep it simple, man. I'm sure there are other things. Mike, you're a smart guy. Maybe go and do a PhD in string theory or something like that. That'll keep your intellectual juices flowing. For the purpose of trading, just wait till the market sell orders are done, buy some, throw a stop in there, and sell it as it rotates higher. Right? Well, it's never too late. Hell, if I had a decent brain, I would have never left university. It was a nice environment. Okay, let's go test that overnight low. Come on down. Looking for 35 and 3/4. Yeah, but there's no look below and fail, Mike. There's no look below and fail. It's straight selling off. So you got to wait till it does this and then come back up. We're looking below, but we haven't failed, right? So we're looking below. Once again, you got to wait for that to go long here. You just let them work this out now. Leave this alone. And if it doesn't look below and fail, you know that there's going to be sellers at 42. So if you go long 40 and 3/4, you can anticipate a 42 seller, right? Mike, do you understand what I'm saying? Oh, you're talking on YouTube. Okay, good. There's that 42. Hey, look, we cleaned it out. That's a stronger reaction than I thought. I thought it would stop at 42 and rotate down. But there you go. There's your look below and fail. And that surprised me. I was short biased. I thought we were going to take out that overnight low. So now we've tested that 40 level a couple of times, right? Where we failed to take it out, and now we did a look below and fail of it. So now I trust that level a little bit more. Because when we opened that 39 and 3/4 door, what did it do? It brought in buyers. Who are the buyers? The people who are short from yesterday. Now does that kind of put a picture together for you guys on how to look at a market and see what's actually really going on in the market? Cool. Yeah, that's it for me. Hey, Moran, how are you? I know this method of teaching is not popular, right? Because I can't scam you with some indicator or something, right? It's just based on common sense in business, right? Which is people hate being sold common sense. Thing is, I'm not trying to sell you anything, right? You know, we'd love you to come into the room at the trading syndicate, right? We want to grow our community, right? And we think that we provide value. We feel we provide value, but no hard sell, right? I just want people to think with some common sense. And I really, really hope that you guys can actually take some information and turn it into cash. Because we spend so much of our lives sitting in front of these screens, ignoring your wife, ignoring your family, losing money, getting stressed out, hair falls out, all of this stuff, all of this stress. It's not an easy business to make money in because you're at a distinct disadvantage because nobody teaches you the business. So you have no idea what the hell you're doing. I just want people to be able to get paid for the work that they do, right? I just want you guys to be able to pay your rent, you know, to pay your phone bill, and to not pull out all your hair when you're doing so, you know? Right? Once you say, you know what, blowing up accounts is not okay, you know, taking stupid trades is not okay, right? Once you come to those things, you'll start acting like a business person and conducting yourself with some discipline. And I know it really sucks and it's boring, but that's how you make money, right? Here's the good thing about retail trading. You get to do business on your own terms, right? So when the trade matches the terms that you do business under, then you execute. If the trade does not match how you do business, tell them to go pound sand. Go sell crazy somewhere else. I'm not taking that trade, right? It's your money, folks. Protect your money. Trade smart. And we'll see you at 9 a.m. Eastern Time for the RTH session. Thank you very much for coming and spending some time with us. If you have any questions about this or if you want private coaching, reach out to me. I offer a lifetime coaching program where I basically haunt you until you become profitable. Thanks, everyone. We'll see you at 9 o'clock. Bye for now.